Life insurance is rated on three basic things: age, health, and gender. The older you are, the more expensive it is to start a policy. The healthier you are at any age, the better rate you can get. And all things being equal, men are more expensive than women. Now, there are three basic types of life insurance. The first type is called term life insurance. Term life insurance works just like renting an apartment. When you rent an apartment, you sign a lease for 1 year, 3 years, 5 years. You pay your rent every month, and you have a place to live. It's less expensive than buying a house. If something breaks, you don't have to pay to fix it. You just call somebody in to do the repair. But that place doesn't belong to you. You can't sell that apartment to somebody else. You simply have a place to live. The money you're paying in every month, well, it's just gone. At the end of your lease, you either have to sign a new lease or you move out. And if you sign a new lease, it's going to be more expensive than what you're paying. Cost of living goes up, inflation, new management company, etc. Term life insurance works the exact same way. With term life, we sign a quote-unquote lease for 10 years, 20 years, 30 years. We pay our money every month, and we have life insurance. It's less expensive than other types of life insurance, but we don't own it. And at the end of the term, it either goes away or it becomes more expensive. The second type is whole life insurance. Whole life is like buying a house. When you buy a house, you sign a contract, and as long as you make your monthly payments, that house is yours. Nobody can take it away from you. But that house is more expensive than renting an apartment. If something breaks, you have to pay to fix it. You have to buy homeowner's insurance. You have to pay property taxes. There's a lot more to it, but that house builds cash value, and you can borrow against it. It becomes a tangible asset for you, just like your home, your personal property, money in the bank, etc. Whole life insurance works the same way. With whole life insurance, you sign a contract. You pay your monthly premium. That life insurance is yours. You own it. Nobody can take it away from you. Just like your home, it builds cash value. You can borrow against it. And it's listed as an asset. But it's more expensive than renting term insurance. Let's look at an example. Keep in mind, this is just an example. Let's say you're 30 years old and you're buying $150,000 worth of term insurance. Maybe it's $25 a month. It's term. It's temporary. It's inexpensive, but it's life insurance coverage. For that same amount of whole life, it might cost $200 a month, but it's permanent and you'll have it forever. $150,000 of term, not expensive, $25 a month, but it is temporary. $150,000 of permanent whole life, $200 a month, more expensive. You may be thinking to yourself, I like the price of term, but I also like the lifetime benefits of whole life insurance. But remember, I told you there are three types of life insurance. The third type is universal life, or UL. Here's how it works. You make contributions, and these contributions are going to be somewhere in between the cost of a term policy and a whole life policy. Let's call it $100. The first $25 buys 1 month's worth of term insurance. The other $75 gets invested for your benefit. The next month you contribute $100. $25 buys term, $75 gets invested on your behalf. This goes on year after year. Now, as you get older, the term insurance portion of the policy gets more expensive. So at age 50, let's say, maybe the term insurance part is $50 a month, but you're still contributing $100 a month. $50 takes care of the term insurance for that month. $50 gets invested for you. Remember, as you get older, the term insurance rate increases. At age 80, let's say, maybe that term insurance now costs $125 a month, but all you're contributing is $100 a month. All of that $100 gets applied to the life insurance portion of the policy, and nothing gets invested. And you're still $25 short. Keep in mind, you've been saving all this money for all these years. So the life insurance company simply takes $25 out of the investment part of the policy and applies it towards the life insurance part of the policy. We overpay when we're young, so we can underpay when we are old. It's a permanent insurance product built on term insurance principles. Which one of those three types of life insurance sounds the best for you? When we get back together to talk about your life insurance program, we can dive deeper into the type of policy that appeals to you the most. See you then.